Welcome to all the semester 6 honors and general students. This is our class on cash flow statement. Actually, uh, there are 6 techniques of financial statement analysis. Among those 6 techniques, one of the most important technique of financial statement analysis is cash flow analysis. What are the 6 techniques? Ratio analysis, comparative statement analysis, trend analysis, common size statement analysis, fund flow analysis, and lastly the cash flow analysis. Next, the definition of the cash flow. A cash flow statement is a statement which gives an analytical information regarding the details of the inflows and outflows of cash of an enterprise during a particular period of time, distinctly depicting their sources and uses. Now the differences between cash flow and fund flow. Cash flow is based on narrow concept called cash, whereas fund flow is based on wider concept called working capital. The utility of the cash flow statement is to find out the net cash flow. The utility of fund flow is to understand the financial position of the company. In case of cash flow statement, the main source of cash inflow is considered to be the sales and not the net profit of the business, whereas in case of fund flow, the profit from operation or the net profit is considered as a principal source of fund. Under cash flow, the operating activity of the cash flow statement shown. In case of fund flow statement, fund flow shown in the statement of changes in working capital. Types of accounting: the cash flow statement based on cash basis, whereas fund flow statement is based on accrual basis of accounting. From the point of view of the effect, through cash flow analysis we get to know the net cash flow, whereas from fund flow analysis, through fund flow analysis we get to know the change in working capital. Cash flow statement is a financial statement, but fund flow cannot be considered as the financial statement. From the point of view of the term, we can distinguish between cash flow and fund flow in this way. The cash flow is a short-term analysis of cash flow, but in case of fund flow is the long-term analysis of working capital. Lastly, the cash flow is used for cash budgeting, whereas fund flow is used for capital budgeting. As per the modern concept, which is also based on the revised accounting standard 3, the cash flow statement can be segregated into 3 main parts. One is cash from operating activities, number 2 is cash flow from investing activities, and thirdly cash flow from financing activities. Now the objective of the cash flow statement: firstly, to ascertain the sources from activities like operating, investing, financing activities from which cash and cash equivalents were generated by an enterprise. The next objective is to ascertain the uses by activities like operating, investing and financing activities for which cash and cash equivalent were used by an enterprise. Next objective, to ascertain the net change in cash or cash equivalents, indicating the difference between sources and uses from or by three activities between the dates of two balance sheets. Next, the uses and advantage of cash flow statement. First point is the liquidity. It shows the liquidity position of the business. Second point is optimum cash. The cash flow statement helps to management to make a plan about the optimum use of cash during a predetermined period. Third point is management assistance. The cash flow statement helps the management to avoid both ideal or excess cash and shortage of cash. Fourth point is movement of cash. The cash flow statement shows the flows and flows in and flows out of cash. Fifth one is analysis. Cash flow statement analyzes the movement of cash during a particular period. Next point is optimum result. Cash flow statement helps to utilize the excess cash for the maximum benefit of the business. Next is cash management. Cash flow statement helps to make the plan for recovery of any shortage of cash during a particular period. Next, we consider some of the important definition regarding some items which we will consider at the time of preparation of the cash flow statement. First one is the cash. Cash comprises of cash in hand and demand deposits with bank. The cash next is cash equivalent. The cash equivalents are short-term, highly liquid investments that are readily convertible into known amount of cash and which are subject to an insignificant risk of change in value. An investment normally qualifies as cash equivalent only when it has a short maturity of, say, A. treasury bill, B. commercial paper, C. money market funds, D. investment in preference shares, and redeemable within 3 months can also be taken as cash equivalents. Next, cash flows. Cash flows are inflows and outflow of cash and cash equivalent. As per Accounting Standard 3 requires a cash flow statement to be prepared and presented in a manner that it shows cash flow from business transaction during a period, classifying into operating activities, investing activities, and financing activities. Operating activities are principal revenue producing activities of an enterprise and other activities of an investing financing activities. Investing activities are the acquisition and disposal of long-term assets and other investment not included in cash equivalents. These activities include transactions involving purchase and sale of long-term productive assets like machinery, land, etc. Financing activities are the activities that result in change in size and composition of the owner's capital, including preference share capital in the case of a company and borrowing of the enterprise. Next, we consider the cash inflow and cash outflow. The items related with the cash inflow and cash outflow or relating to operating activities. The cash inflows under operating activities are cash sales, cash received from debtors, cash received from commission and fees, royalty. In case of cash outflow, cash purchase, payment to creditors, cash operating expenses, payment of wages, and the income tax. Next, under the operating activities, if the business is a financial company, so then the cash inflows are cash received from interest and dividend and sale of securities. In case of financial companies, the cash outflows are cash paid for interest, purchase of securities. The cash inflows under investing activities are sale of fixed asset, sale of investment, interest received, dividend received. Cash outflow under investing activities are purchase of fixed asset, purchase of investment. Cash inflows in financing activities are issue of shares in cash, issue of debenture in cash, proceeds from long-term borrowings. Cash outflows are payment of loans, redemption of preference shares, buyback of equity shares, payment of dividend, and payment of interest. In case of calculation of the operating activity, the cash inflow or outflow under operating activities, we can consider the cash flows from operating activities. We can consider the two types of method. One is the direct method and another one is the indirect method. So here is the some discussion over the direct method for the calculation of cash flow from operating activities. As the name suggests, under direct method, major heads of cash inflows and outflows such as cash received from the receivables, employees benefit, expenses paid are considered. It is important to note here that the items are recorded on an accrual basis in statement of profit and loss. Hence, certain adjustment entries are made to convert them into cash basis, such as the following. Actually, in case of direct method, we consider some item from the profit and loss account, and every day we know that the profit and loss account, the items, the amounts are in form of accrual basis. So with some adjustment entries, after considering some adjustment entries, we will convert them into cash basis. Like first one is cash received from customers. How do I calculate the cash received from customer? Under direct method, revenue from operations plus with trade receivable in the beginning minus trade receivable in the end. Second is cash payment to supplier. How do I calculate the cash payment to suppliers? Purchases plus trade payable in the beginning minus trade payable in the end. In case of purchase, cost of revenue from operation minus opening inventory plus closing inventory. For calculation of the cash expenses, we consider the expenses on accrual basis plus prepaid expenses in the beginning and outstanding expenses in the end minus prepaid expenses in the end and outstanding expenses in the beginning. Next, we consider the following items are not to be considered in case of direct method. Non-cash items such as depreciation, discount on shares, items which are classified as investing or financing activities such as interest received, dividend paid as per accounting standard 3 under the direct method. Information about major classes of gross cash received, and cash payments may be obtained either from the accounting record of the enterprise or by adjusting revenue from operating cost of revenue from operations and other items in the statement of profit or loss for the following: changes during the period of inventories and trade receivables and payable. Next, other non-cash items and other items for which cash effects are investing or financing cash flows. Next, from this particular format, we can consider how we can calculate the cash flow from operating activities under direct method. Cash flow from operating activities: cash received from customer less cash paid to suppliers and employees. Then we will get the cash generated from operations. From cash generated from operations, we can deduct income tax paid, and after deducting the income tax paid, we receive the cash flow before extraordinary items. Next, the result is the extraordinary item. Next, after add or less the extraordinary item, we get the net cash from operating activities. Next, this is the full format of direct method for calculation of the cash flow in a particular business as per accounting standard 3 revised. So here, first, number one is the cash flow from operating activities. Under the cash flow from operating activities, we consider the collection from customers. From collection from customers, we deduct the cash paid to suppliers, cash paid to employees, payment for other operating expenses. After deducting these two items, we receive the payment for other operating expenses. Next, cash generated from operation. The result is the cash generated from operation less income tax paid, and the result is cash flow before extraordinary item. This one is the cash flow before extraordinary item. Next, add extraordinary receipt, that is example is the earthquake disaster settlement. Next, we receive the net cash from operating activities, the actual amount of net cash from operating activities. Number two is the cash flow from investing activities. For this purpose, for the calculation of the cash flow statement of investing activities, we will consider this portion in the next format, where we will see the how the indirect method can be applied for calculation of the cash flow statement. Similarly, in case of the third point, the cash flow from financing activities, the pro forma relating to the cash flow calculation of the cash flow from financing activities, we will consider the next format. This one is the format for calculation of the cash flow under indirect method. Basic difference between the two format, that means the calculation of the cash flow under indirect method and calculation of the cash flow under direct method, the basic difference part is that particular portion. That means, number one, cash flow from operating activities. The calculation method of cash flow from operating activities is different in indirect method process, and at the same time it is also differ from the indirect method when we had considered the direct method for calculation of the cash flow. Only this portion is different, is the main difference between the two types of method applicable for calculation of the cash flow. This one is the details of the pro forma. That details pro forma will be available in the college website, so I request to everybody, please download it. All the items are there regarding calculation of the cash flow under investing activities, at the same time cash flow under financing activities, and how and the last portion, that means the from where we can conclude that whether the cash inflow is there or cash, what about the changes of cash relating with the in comparison to the previous year. So next we consider a problem. This one is the income statement for 2019 of a particular company. The sale is 1 lakh, and cost of sales including depreciation rupees 10,000. It is 75,000 less, so that amount is 2,50,000. Sorry, this one is the sales is 1 lakh and 75,000. 7 lakh 50. Sorry, this one is the 7 lakh 50,000, and it is a 10 lakh. This figure is a 10 lakh, and the difference figure is 2,50,000. Next, there are some expenses. Selling and administrative expenses 50,000, other expenses 25,000, interest on loan 5,000. There is a balance sheet of balancing of the 2 years, 2018 and 2019. Here is the share capital for 2018 8,60,000 and 2019 10 lakh. Reserve is 6 lakh, and reserve is 2019 is 7,70,000. Loan is 75,000 and 1,25,000. Provision for depreciation is 40,000 and 50,000. Creditors is 2,75,000, 2,25,000. Outstanding expenses 25,000 and 10,000. Plant and equipment is 12,50,000 and 14,90,000. Stock is 3,25,000 and 4 lakh. Debtors is 2 lakh and 1,50,000. Investment 25,000 and 75,000. Cash and bank is 75,000 and 65,000. Next, this one is a solution of the last problem, and here we consider the cash flow statement under direct method. So in case of direct method, firstly, number one is the cash flows from operating activities. Under the cash flows from operating activities, here first item is a collection from customers, and for this particular purpose, please check the workings. In the workings, the amount is here 10,80,000. Sorry, this one 10,50,000. Sorry, amount is 10,50,000. The amount is 10,50,000, and the calculation of this 10,50,000 is here. Collection from customers, the total assets 10 lakh, at decrease in debtors, it is 50,000. So the total is 10 lakh 50,000. 10 lakh 50,000. Next, in third inner column, we had we had make the total of deduction for payment to suppliers, 8,65,000. Payment to suppliers, this one is we derive from the note number 2. The amount is 8,65,000. Here is the amount 8,65,000. What is the calculation of payment to creditors? Cost of sales 7,50,000 less depreciation 10,000. Amount is 7,40,000. At closing stock 4 lakh less opening stock 3,25,000. And 8,15,000 is a purchase, and from next with the purchase we add the decrease in creditors is 50,000. The amount is 8,65,000 is the payment to creditors. Then payment for expenses 90,000. This one is related with the note number, working note number 3. This one is the working note number 3, payment for expenses. Selling and administrative expenses is 50,000, other expenses is 25,000, 75,000. Next, at decrease in outstanding expenses 15,000, total amount is 90,000. The amount 95,000. Here is the amount 95,000, which is cash generated from operation. From these 95,000 we can deduct income tax paid, but as per this problem there is no income tax, so it is nil. So net cash from operating activities is 95,000. Then cash flow from investing activities, purchase of investment is 50,000, purchase of plant and equipment negative figure 2,40,000. This 50,000 also negative figure, so the total net cash used in investing activities negative 2,90,000. Next, number 3 is cash flows from financing activities. Issue of shares 1,40,000, loan raised 50,000, total 1,90,000 less payment of interest 5,000. Outer column 1,85,000 net cash from financing activities. So here is the net decrease in cash and cash equivalent, and the negative amount 10,000. Add cash and cash equivalent at the beginning of the year 75,000. So the cash and cash equivalent at the end of the year is 65,000. This particular 65,000 is there, 65,000. And next, this one is the cash flow statement under indirect method. Under indirect method, here we consider first one, net profit as per profit and loss account 1,70,000, at depreciation 10,000, interest on loan 5,000, trading profit before adjustment of working capital is 1,85,000, at decrease in debtor is 50,000, amount is 2,35,000, less increase in stock 75,000, decrease in creditors 50,000, decrease in outstanding expenses 15,000, 1,40,000 we we had deducted from 2,35,000. The result is 95,000. Cash generated from operation is 95,000 less income tax paid. There is no such income tax paid, so that's why it is nil, and the amount is 95,000. So cash flow from investing activities we had already calculated it under the direct method. The amount is negative figure 2,90,000. Cash flow from financing activities, this one is we had already calculated under the direct method. The amount is 1,85,000. The 10,000 net decrease in cash and cash equivalent, negative figure. 10,000 is the negative figure. Add cash and cash equivalent at the beginning of the year 75,000, and again the same amount in respect of our last direct method 65,000. It is 65,000 is the cash and cash equivalent at the end of the year. So this particular problem also available in the college website in PDF format. I request to everybody, so please download it. If you have any problem to understand the total discussion in cash flow statement, you please call me or send your message in my mobile number, in my WhatsApp number. My personal mobile number and WhatsApp number are same number, and it is available in the college website. Thank you everybody.